Good day friends, CEV Group welcomes you for watching this video. Please do not forget to like, comment and subscribe our YouTube channel Registered Values Club for getting all new professional updates. So in this video we will try to learn how S-curves may be used for calculating the depreciated depreciation or depreciated replacement value of the building by using the depreciation calculated from S curves. Now we have been using different methods such as straight line method, constant percentage method and sinking fund method for calculation of depreciation, but these methods do not give the real picture of depreciation. This video will try to make the things clear how S curves is actually gives the real values for depreciation. So S curves are used for calculating precision in building valuation, and how it is done we will be discussing in this video. S curve methodology brings unprecedented accuracies to building depreciation calculations. This advanced approach combines financial theory with engineering principles to create a powerful asset management tool. So first we will understand what is depreciation and try to understand the depreciation fundamentals. As far as definition of depreciation is concerned, this is systematic decrease in an asset's recorded value asset's recorded value over its useful life. So means decrease in the asset's recorded value over its useful life. Then what is its financial importance? So it is critical for accurate balance sheets, tax calculations, and investment and value analysis. So what is traditional limitations? So the methods we have been using, such as linear methods, they fail to capture the complex reality of building deterioration patterns. What are these deterioration patterns we will discuss in the coming slides. So basically decrease in the value of assets value because of its physical deterioration, because of its obsolescence, that is called depreciation. So what is S curve basically? So if we try to learn it from mathematical model, it is a sophisticated function that maps value changes throughout an asset's lifetime. It produces a characteristic S shape that gives its name. It reflects reality. Basically, buildings do not depreciate linearly. So S curve captures the slow initial deterioration, rapid middle phase decline, and gradual end stage phase. So basically what happens is when the building is constructed, new building is constructed, so it will deteriorate at a slow phase in the initial stages. But as the age increases in the middle phases, the deterioration or decline is at a rapid phase, and in the end life period of the building, it again gradually gradual decrease in the value in the end age staging. So this is the basic reality which is not reflected by any of the traditional method we have been using. It is only the S curve which gives a reality of depreciation. So it can be used in cost disciplinary tool. It may be used by engineers, it may be used by economists and financial analysis to model complex value transitions. So mathematical foundations. So sigmoid function basics. The mathematical core of S curves follows the formula Vt equals to V naught divided by 1 plus e raised to power minus k into t minus t0. This produces a characteristic S shape. The key parameter in this equation is initial value is V0, inflection point is T0, and the rate coefficient is K. These three things determines the curve's specific shape. So mathematical components, this is basically this uh, S curve is based upon combination of logarithmic and exponential elements to model the complex interplay of physical deterioration and economic obsolescence. So type of S-curve models. So first type is linear S-curve. This blends straight line depreciation with sigmoid adjustment, best for relatively practicable assets. Predictable assets, sorry. Then second type is exponential S-curve. This emphasizes accelerated deterioration in the middle life stages, ideal for technology heavy based buildings. Third type of S-curve is logistic S-curve. The classical sigmoid model most suitable for traditional construction with well-established deterioration patterns. And fourth and the last type is modified approaches. These customized models with additional parameters for specific building types are involved. So building life stages. So first up is construction phase. So during the construction phase, what happens to the value? Value increases as the building is constructed. So depreciation has not yet begun. Then initial use phase. Second phase is initial use phase. Second stage. So minimal depreciation occurs. Building maintains most of its original value and then starts rapid deterioration. System begins falling, value decreases more quickly during this inflection period. And third and last fourth stage of the building life cycle is stabilization. Rate of decline slows, maintenance extends the remaining useful life. So this is initial use period. This rapid deterioration is during the middle phase, and this stabilization is during the last phase of the last stage of the last life of the building. Then what are the factors that affect the building deterioration? First thing is location and environment. So if the building is near a coastal area, then its deterioration will be more due to environmental effect. Then its location, if it is in urban or extreme climate locations, this accelerate deterioration. So the building depreciation will depend upon its location as well as in the environment in which it has to live its life. Second thing is maintenance quality. So if the building is regularly kept and this will significantly extend the useful life and slow the depreciation rate or slow the value decline thereby. So third thing is technological obsolescence. So outdated systems reduce marketability regardless of physical condition. Though the building may be very good from physical point of view, but if it is has outdated system, its marketability will be reduced and thereby reducing its value. Then material degradation. So different construction materials deteriorate at varying rates that will affect the value of the building. Next is how the S curve is calculated. So S curve calculation methodology. First thing is input variable identification. So first of all, you will identify which variables you have to choose. So you have to determine the key building characteristics such as age of the building, construction type, location, maintenance history, and marketability conditions. These are the few variables which you may choose for S-curve calculation. Then you will collect data according to the things you require, data about the age, data about the construction type, and data about the location, all these type. So for these variables, you have to collect the data. So gather historical valuation data, conduct physical assessment, and analyze comparable property to find out these variables. Then computational process. Apply the appropriate S-curve formula, calibrate parameters, and generate depreciation projections. Then based upon the test results against known benchmark, you will have to validate these results, and if some adjustment has to be done, then you will adjust for the anomalies and special conditions. So in this way, you will calculate the required data for S-curve calculation. Next, what are the practical applications of S-curve? It may be applied in residential as well as in commercial building. For residential buildings, S-curve may be used for calculating the property age, construction quality, and neighborhood trends. These things are used for assessment of S-curve parameters. So, by using these parameters, you can calculate the residential specific S-curve parameters to determine the front value of the property. So what this S-curve data or S-curve will give you, it will give you long-term projections. So with the help of S-curve, you can forecast future property values for investment planning. You can also renovation impact. You can design the renovation of the building with the age. It will affect the and quantify how improvement, reset or modified the depreciation curve. And depends the same thing you can apply in the commercial value building valuations. The same thing can be applied in the commercial building valuation. So you can do property assessment based upon the construction quality, tenant history, and location premium factors for commercial buildings. So specialized considerations can also be incorporated in for unique features like specialized infrastructure, floor loading, or clean room facilities, etc. So the main thing here, the difference between commercial and residential is you can do incorporate this thing income potential analysis. So you can correlate the physical depreciation with the rental income projections model with the help of S-curve. And of course, as in the case of residential buildings, it can in same in the case of commercial building, it will give you long-term projections. You can create 20 plus years valuation forecast for institutional investors. So on the these for these as per you need advanced computational techniques such as machine learning integrations. So neural work analysis thousands of buildings to determine or to identify deterioration patterns. With the predictive analysis, you can forecast depreciation based upon complex multi-variable models. And of course, these advanced computational techniques will give you real-time valuation for dynamics models that updates as the new data becomes available. So for as per you have to be conversant with advanced computational techniques that will help you in these things. Then you can use software and tools. There are specialized tools, softwares which can be used for build valuation, purpose-built valuation platforms with pre-configured as per models for different building types. And there are software which are based upon Excel models. With the Excel, you can customize spreadsheets with S-curve formulas for flexible scenario planning. And there are mobile applications also available, which are field-ready tools for on-site assessment, and real-time calculation. Then, with the help of, as per see here, if you use a straight line method, the depreciation curve will be somewhat like this. So it is linear, it is following a linear pattern. But see, in the case of S curve, in the initial phase it is somewhat linear, but in the middle phase, depreciation is not linear, and again in the later stages it is very less, as we will consider a numerical problem that will explain all these things, how the S curve is different from the simple S straight line method curve or constant percentage line method, the constant percentage depreciation method. We will discuss with another example. So what S curve can also be used for when you do valuation, calculate depreciation with the help of S curve. It will help you in the risk management implications such as insurance planning, investment decisions, maintenance planning. Is in this case, if it will reduce the risk associated with all these things, then S curve has a advantage. What advantage it will give you precise replacement cost estimation, because in all these things you need these things. What you need is precise replacement cost estimation, accurate ROI projection, strategic intervention timing. So all these things will help to reduce the risk in insurance planning, investment decisions, and maintenance planning, etc. And then what will be the financial impact? It will increase 5 to 15% premium optimization. It will improve capital allocation and 20 to 30% life cycle cost reduction. It will lead to see how much difference it will make to the life cycle cost reduction, 20 to 30%. And again, it will increase 5 to 50% premium optimization. So it S curve is also applicable and follows international accounting standards as far as IFRS guidelines are concerned, international financial reporting standards. These require reliable depreciation methodology. So what S curve provides, it provides defensible valuation approaches compliant with IAS 60, International Accounting Standard 16. Then US GAAP principle. So generally expected accounting principle allow for systematic rational allocation of asset cost. So what ASPER provides? It provides mathematically sound depreciation models. So it is also applicable for US GAAP principle and for global variations. For different jurisdictions maintain unique and valuation requirements. So S curve can be calibrated to satisfy diverse regulatory transformers, regulatory frameworks. Then nowadays there are many technical, non-technological innovations. So emerging technology transforms how we collect and analyze building depreciation data. IoTs, Internet of Things sensors, AI algorithm, digital twins, and AR interfaces create unprecedented valuation accuracy. So, what are the limitations and challenges of using this S curve? First thing is, all this thing is data dependence. So, more accurate the data, more accurate will be your S curve. So, S curve accuracy depends on quality historical data. Many buildings lack comprehensive records, model complexity. So advanced test curve requires specialized knowledge. So this creates barrier to widespread adoption. So it is Very important you know this model complexity. Then contextual variability. Each building is unique. So standard model may miss property specific factors affecting the depreciation. So you cannot use a single model for all type of buildings because each building is unique, and so you can not produce that standard model. If you are using standard model, it may miss property specific factors that are affecting the depreciation. Then implementation curve. So sophisticated model you know it requires a lot of investment. So small portfolios may not be able to justify the expenses of creating model and using this or getting all the data and creating models for using this curve. It might not be easy or it may not be easy to justify the expenses for small portfolios. Then future of asset valuation, with in the coming years, 85% of valuation process that will be automated within 5 years. So what it will lead to accuracy improvement, and accuracy will increase by three times at least. So expected increase in valuation precision through AI and blockchain integration, and of course it will reduce the cost by about 40%, which is projected decrease in valuation expenses through computational efficiencies. So practical implications strategies, how you can practically use this as curve strategies. First thing is comprehensive modeling. So when you are doing modeling, what you have to do, you have to identify the relevant building characteristics which you have to use. Then you have to collect historical valuation data, select appropriate S-curve formula, and then calibrate the parameter to local conditions. For this, you need skill development. If you have the skill for doing all this only, then you can produce accurate as curve results. So for that we need skill development. We need to train the staff on SQL fundamentals, develop computational proficiency, build data collection protocols, establish quality control procedures. Then you can this S-curve is having cross-disciplinary approach, combine engineering expertise, integrate financial analysis, incorporate property management insights, apply regulatory compliance knowledge. So in this way you can practically implement the strategies which can enhance your quality of work by using S-curve. So first thing you are using S-curve as a value of building and land and building, you must know what is depreciated replacement cost. So the depreciated replacement cost is the current cost of replacing an asset with its modern equivalent asset, less deductions for physical deterioration and all relevant forms of obsolescence and optimization. So DRC is basically what is depreciation replacement is first you have to calculate the replacement cost of the building, and from that replacement cost you have to deduct the uh, uh, cost of physical deterioration and all relevant forms of obsolescence and optimization. So where DRC is used, it is used when there is not a directly similar option available for comparison. Therefore, a hypothetical alternative, also known as modern equivalent asset, must be used. The fundamental idea is that a prospective buyer would not spend more than the price of comparable new asset. So the gross replacement cost of MEA, modern equivalent asset, must be adjusted for valuation depreciation to account for valuation between it and the modern counterpart, including physical state, remaining economic life, comparative running cost, and relative functionality. So there are three methods which are generally used for calculating the depreciation. So what are the basic difference between them? Because as far as straight line method is concerned, it assumes depreciation happens uniformly over time, creating a straight downward sloping line. If residual factors like building utility are considered, the curve can deviate slightly. Second method is constant percentage method. It is also called declining balance method. It calculates depreciation as a fixed percentage of assets book value. The drop is sharp in the initial years with slower depreciation in the later. And the third method is sinking fund method. In sinking fund method, we set aside a fixed amount annually in a fund, earning interest to match depreciation. The shape is more linear early on with S curve appearing due to increasing interest contribution. So, what the difference methods? What are the limitations when you are using these methods instead of S curve? So, problem is that different depreciation methods produce varying patterns over a asset's life. The straight line method assumes uniform depreciation, creating a linear downward slope rather than an S curve. The constant percentage method or declining method shows sharper drop in the initial years with slower depreciation later. The sinking fund method set aside fixed amounts annually in a fund earning interest to match depreciation, while more linear early on, as curve may appear due to increasing interest with contribution over time. So none of these three methods give you actual depreciation because in the initial stage depreciation is slow, in the middle stage depreciation is rapid, and again in the last stage of the building there is stabilization in depreciation of the building. So none of these three methods are giving you the actual results. Some have a problem, some has another problem. So why we should use as per you can see from these three differences. So we will be taking an example that will make the things clear that how we can use the S curve for actual or real depreciation. Let us consider a building with a replacement cost of 1 crore and a useful life of 60 years with zero value expected at the end of its life. The depreciated value calculated using different methods show significant value variations over time. With 10% depreciation per annum, the constant percentage method does not reach zero at the end of 60 years. So even with 10% depreciation per year, the constant percentage method does not reach zero at the end of 60 years, retaining rupees 17970. The sinking fund method calculated at 6% shows a different pattern of value reduction. See if at the end, at the start value of with all the method is 1 crore. See here at the end of 10 years with straight line method at 10% at 6% depreciation per year value after 10 years is 83 lakh 33,333 with constant percentage it is 34 lakh 86,784 and with sinking fund it is 97 lakh 52,565. So in this way you can find out the values for sinking straight line method, for constant percentage method, for sinking fund method. For sinking fund method, you have to calculate IC and S. S is the amount which is deposited for n number of years if you are depositing any amount in the bank. So and IC is the sinking fund coefficient. So you can calculate IC and S. You multiply IC with S, that will give you the depreciation percentage with as far as sinking fund method is concerned. So see the values, difference of values here, and then we draw for probable S curve. We calculate the values as per this table for 1 crore, then 96 lakh, 82 lakh, 50,000, then 18 lakh, then 40 lakh, and what in this way you can calculate it is 18 lakh and then 4 lakh and at the end it is 0. So if you draw the graph, see here, this shows the appreciation as far as straight line method is concerned. This shows constant percentage method, and this curve shows you sinking fund method, and this is S curve. Now see here, in the initial stages, the values of S curve this year at the end of 10 year, at the end of 20 years, the value are nearer to sinking fund method. If you have value you have calculated, these values are nearer to S curve. The values which you have calculated as for sinking fund method and S curve, they are almost nearer to each other. And then when you go to the middle phase, 30 to 40, 30, 40 and 50, for 30 to 40, 20 to 20, 30 and 40. See here at 30 years, value with the S curve and your straight line method, they are similar. Similarly, at the end of 40 years, values are almost equal with straight line and this S curve. And in the later stage, you see here, these values almost coincide with the constant percentage method. See this. So instead of using single method, what you can do in the initial stages, you can use the sinking fund method. In the middle stages, for 20 to 40 years of the age, you can use straight line method, and at the end of in the later stages, you can use constant percentage method that will give you correct values, real values, which are as per the actual depreciation process of the building. On this graph clears you so how you can use the S curve. So basically you can use hybrid method. We will discuss this how you can use this method. So you can compare all depreciation models with the comparative depreciation curve you can draw. When comparing the four depreciation methods, straight line method, constant percentage, sinking fund, and S curve, we can observe distinct pattern how each calculation the calculates a depreciation over an asset's lifetime. So the graph shows the S curve provides a more nuanced approach to depreciation with its characteristics slow fast slow pattern. So this contrasts with the linear decline of the straight line method, the rapid early decline of the constant percentage method, and delayed decline of the sinking fund method. So how you can use this? You can use, instead of using a simple method, you can use hybrid approach to depreciation. Without reliable empirical evidence of real depreciation route for building, a hybrid approach may produce most accurate results. This combines the strengths of different methods at various stages of an asset's life. The proposed hypothesis suggests using sinking fund approach for the first third asset of the life, the straight line method for the middle third, and the constant percentage method for the final third. So this hypothesis requires validation and empirical data determines its validity in the real markets. So in the early life from 0 to 20 years, you can use sinking fund approach, which may produce the most reliable results in the first one third of the asset life, reflecting slower initial depreciation. And in the midlife, 20 to 40 years, you can use straight line method may produce the most reliable results in the middle one third of the asset life, capturing the steady decline in value. And in the on the later stage, 40 to 60 years, you can use this constant percentage approach, which might produce the most reliable outcomes at the last stage of the asset life, reflecting the slowing depreciation rate. So real estate valuation implications. So what you have to do, first thing is you understanding depreciation pattern has significant implications for real estate valuation and investment decisions. The S curve helps to visualize how depreciation impacts building value over time, providing a framework of more accurate assessment. Appraiser can use this knowledge to assess a building's current value, considering its age and the remaining useful life. Investors can make more informed decisions about purchasing, holding, and selling real estate assets based on where they fall on the depreciation curve. So, first thing is you have to understand depreciation. So, the S curve helps to visualize how depreciation impacts the value of the buildings over time, accounting for physical deterioration, functional obsolescence, and economic factors, etc. So, appraisals application in appraisals, appraisers can use their knowledge to assess the current value of a building more accurately, considering its position on the depreciation curve and the remaining useful life. Then investors can make more informed decisions about purchasing, holding, or selling real estate assets based on depreciation patterns and projected future values. And then obsolescence factors. The S curve helps to understand the impact of various types of obsolescence, functional, economic, and physical, on the building value throughout its life cycle. So, all the persons concerned with the real estate, they can use this S curve, whether they are investment, whether they are investors, whether they are appraisers, they can get knowledge about their work based upon the data from the S curve data you can use for calculating depreciation for you can make investment decision, you can do valuation based upon the data you get from the S curve. And of course, obsolescence factors can also be determined by using this S curve. So conclusion means for a strategic asset management, you need what this S curve will give you. It will give you precision valuation. Its S curve provides you mathematically sound building depreciation models. So it will help you to developing knowledge. So investment in skills and training creates organizational values expertise. So it will also help in financial planning. So accurate projections enable better capital allocation and investment strategies. Then continuous innovations. So emerging technology, these days and methodologies, they are enhancing valuation accuracy. So this is all about use of S curve in real estate valuation. Thank you. Have a nice day.